we have a couple of things to go on. I have to mention our sponsor, ClearchainX. As a leading blockchain enterprise solution provider, ClearchainX empowers business and blockchain enthusiasts worldwide to create cutting-edge applications, optimize their infrastructure, and harness the power of decentralized web access. With a tailored blockchain solution, ClearchainX assures the best results for every project. Built on a foundation of trust, ClearchainX is shaping the infrastructure of the future. With that, we're going to be starting a panel. All right, so this next panel is going to discuss the evolution of blockchain and fintech, specifically its impact on both public and private sectors. Each of our panelists is involved in innovative solutions that solve problems and result in blockchain adoption. They will describe how they tackle their innovation of their respective industries, and I would like to have then each of you to introduce yourself, just briefly, and then I will ask you about the innovation that you brought to your constituents. All right, please.
My name is Lisa Frace, and I'm the Senior Vice President, Chief Financial Officer, and Treasurer for Michigan State University.
Did we want to talk about the innovation we brought, or do that after?
Not yet.
Okay. My name is Amelia Gardner. I am a county commissioner in Utah County, Utah, and I'm also on the State Digital Innovation and Blockchain Task Force.
Kyle?
Hey there, I'm Kyle Hauptman, Vice Chairman of NCUA. It's a National Credit Union Administration. If you don't know, that's basically what FDIC is for banks. We are a regulator and insurer for America's 4,800 credit unions.
Great. So this panel is about the innovation. So if you'd share with us, and don't make it too short, just don't say, hey, we built this and it is adopted. Share with us not only what you built, what were some of the struggles, and what has been the outcome of the innovation you've brought?
So we are working on issuing the tax-exempt tax-exempt municipal bonds via blockchain. And we began our blockchain journey at Michigan State University in 2018 before I arrived and joined the institution. And that started with launching a blockchain fundamentals course, so coursework that students could start to engage in. Students then established a Spartan blockchain club and really started to think about the future applications of blockchain. There were quarterly discussions between students, faculty, and staff in terms of creating a think tank about how we might think about engaging in blockchain activities. And we looked at everything from potential financial transactions, healthcare, registration, supply chain, but quickly the focus narrowed to finance applications and specifically bond financing. There were a couple of reasons. It's just a little bit more mature in terms of thinking about that. Some of these innovations have already taken place overseas outside of the United States. And we were also influenced by the rating agencies really having positive comments about the adoption of blockchain bond issues by Societe Generale and others. Specifically, I'm going to share Moody's quote: "Increasing blockchain technology adoption is credit positive for first mover industry leaders." And so we do believe we will likely be the first to issue. We're targeting a September date. We had the goals of first of all, pursuing that favorable credit rating. We do have a good credit rating, but pursuing that support through early adoption, but engaging faculty, students, and staff. This is, we're a knowledge enterprise. We really need to be able to not only develop some of these ideas, but to implement them and to be leaders in that.
What kind of what kind of bond issuance are you doing?
So it will be a traditional in the sense of, municipal bond. We issue them periodically. In fact, we refinanced a couple of weeks ago. We refinanced a fairly large block. But what we did was we worked with, we did a request for information and ultimately selected Goldman Sachs to help us think through this with support from Accenture. And came to the conclusion that we the best option would be to choose a single project, and we do have a project that has been approved for this. It's a $38 million project, which is much smaller than we usually issue, but it really helps us to focus. We will be using Goldman Sachs's private permissioned Ethereum-based platform, and they are working with Northern Trust to develop a digital wallet. So it really will be a digitally native bond that is issued in dollars. I see a question out there.
Yes, go ahead.
I know, right? Why not get it going? It used to be like this in Bitcoin like 10, 11 years ago, but I have a question for you. When you issue the bond, right, the coupon, first of all, is it issued in the form of like an NFT, and the coupon rate is integrated into it in the form of a smart contract, or kind of, how is it set up? Because I find it like intriguing and interesting, and I like it.
Yeah, so, and I was going to get to that. So we typically issue 30-year bonds with a 10-year call date. That's pretty traditional in terms of the way a long-term capital project is structured. What we're planning to do with this particular bond, recognizing that this is a rapidly evolving technology, and the last thing we want to do is have a 30-year bond that, with technology that's obsolete in several years, is we plan to issue a 5-year bond, or a bond, yes, a 5-year mandatory callable bond, so that we would then refinance it after 5 years and really think through whatever the newly developed, technologies are. We're really excited about this. We really do want to be a leader in this. We see this as really the technology of the future. But until someone dips their toe into the water, it's not going to take off. And we recognize that it is, as a first mover, that there are going to be challenges, which is why we worked with one of the bigger underwriters who also has experience overseas in issuing bonds via blockchain.
Any other questions? Yes.
What's it denominated in?
It will be denominated in US dollars.
And the interest paid out?
So the interest will be set by the market. That's typically what happens.
Out in, not in crypto, it's paid out in,
Oh, it's paid in US dollars.
okay.
Right.
The blockchain is just the infrastructure to manage the,
Right, so it will be a digitally native bond.
interesting. Now, you said this is a municipal bond, but you work for Michigan State. So what's the role between?
So higher ed institutions, and in particular public higher ed institutions, actually do regularly issue through the municipal bond market. That's how we access tax-exempt rates, and we are a tax-exempt institution.
Okay. Any other questions? Yes.
If it's digitally native, but on a private permission.
Use the microphone so
Sorry,
the people
sorry.
who are watching
If-
on YouTube can
Oh.
see you.
Sorry,
Or
if
hear
it's
you.
digitally native, but it's on a private permission blockchain inside Goldman Sachs, like what features would it have that I wouldn't have by just logging in and buying it on a central database? Like presumably I can't ask to bridge it out to Ethereum. I can't get a loan against it on Aave. Like what can I do with it?
Yeah, so their private permissioned platform is Ethereum-based. But right now, that is just not the way bonds are issued. And so there just isn't that market infrastructure to really issue that way. And it will not get there until others start to do this too.
Chances are it was built on Quorum. So if it's Ethereum-based and it's private, it's Quorum.
And now you're getting into the technology levels I'm not familiar with. I do finance.
That's okay. So the creation of wallets for the purchasers, as it's being transferred, so you can sell your bonds within the market. That means then Goldman is also going to be managing the issuance of wallets to the new owners?
No, that's being done through Northern Trust. Typically, you do have a settlement agent.
Right.
And
They're the
and that's, given that this is a whole new way to issue, changing everything all at once is just, you're just not going to get the adoption. So you need to have some structure that that purchasers are used to.
What is the expected number of investors for this issuance?
Unknown. It's really unknown.
Well, the last issuance that you just did, how many investors was it, and what was the size of that issuance?
So I can share the size of the issuance. I really can't share because it's typically not made public, the number of investors. But it was a $307 million
10
issue.
times, almost.
Yeah, but it was also refinancing existing debt. So and the issuers though tend to the purchasers of those kind of bonds tend to be in very, very, very large blocks. $50, $100 million, orders kind of thing. And so and tend to be big institutional investors. Now in the secondary market, anyone can buy them, but typically through one of these big issuances, that's classically the way almost all of those big issuances work,
Well,
not
thank
just
you.
ours.
Perfect. Thank you very much. Amelia, share us what you're doing and what innovations have you created?
Well, I've got a list. So, I don't know which one you want me to go in depth in. I think I've spoken at the GBA before about our online marriage licenses and marriage certificates. And the latest innovation in that area is, so in 2019, we created an online marriage license portal. We started creating a digital marriage certificate that we at the county recognized, but we recently got a bill passed through our state legislature that said that digitally certified government documents now have the same rights and privileges as a physical credential in the state of Utah.
Congratulations.
Yeah, that's huge. And so what we're currently doing right now is setting forth the framework for that, right? So it's one thing to say a digitally certified document will have the same rights and credentials as a physical credential, which is fantastic, but then you also want to make sure that someone doesn't inadvertently utilize blockchain technology to put a whole bunch of PII on a blockchain that is immutable and cannot be changed, right? So now our next step in this process is we have got a committee that consists of a state archivist, so we can make sure we're meeting retention schedules, the state privacy officer to ensure that we're protecting PII, the state cybersecurity specialist to make sure we're doing it in a secure way. And what we're doing now is developing the requirements for what actually does constitute a digitally certified government document. So we're creating that framework now to say what do you have to do to have a digitally certified government document? And then the second part of that process is once we know what constitutes a digitally certified government document, how does a government entity, i.e. a city, a county, or a state agency, how do they get approval for that? So we're looking at what does it do and how do you get approval? So that's my current process that I'm working on. So this is where I've gone from like kind of beginning to end, like beginning of creating an idea of a digitally certified document, all the way through getting recognition statewide and creating a framework so that other government entities can do that. Now, that's really exciting for the people of the state of Utah. But what's really exciting about that for all of you is that we are creating a blueprint for any other government entity to follow so that you can see this is how you do it. This is how you do it responsibly, protecting privacy and security. And then on top of that, we have over 40,000 documents at this point that show that this isn't just a theory, it's a fact.
Excellent. So, yes, please, a hand. She started sharing this with us 2-3 years ago. Yeah, so it's been quite a while, and this is great. What new things are you working on?
So we've got a couple of things. As a member of the Digital Innovation and Blockchain Task Force, what our job is in the state of Utah is to come up with what are the needs of the industry and what are the needs of the consumers, and then how do we responsibly put that into state law. And so our task force is an incubator, but also a filter for blockchain and crypto regulations in the state of Utah. We've got a couple of things that are pretty exciting. The last panel, we had someone talking about the Money Changer Act and how this affects companies, particularly crypto companies, in real time. So we've done a couple of things in Utah. Number one, around that in particular, we did declare that digital assets are not money. So that would mean that any crypto company isn't beholden to the Money Changer Act. Now, this is a good thing in theory. However, what happens is we have several non-custodial wallet companies that are headquartered in Utah. And when those companies go to advertise on like Google or Facebook, those companies say, well, what's your money changer license? But they don't qualify for a money changer license. Try explaining that to the ad people at Google and Facebook. They couldn't. So what we did is we created a registry for non-custodial crypto companies. So in the state of Utah, thank you. So in the state of Utah, what we do is we give you a registry, and every year, instead of applying for your Money Changer Act license, you reapply for your, I don't actually qualify for that, license, if you will, and we give you a number from the government, so that when you go to Facebook or Google to create your ad account and they say, what's your Money Changer Act license? You just put in this license number. So every year you're recertifying to the state, I am a non-custodial wallet, I don't qualify for the Money Changer Act, but here's my license, which gives me the ability to do business.
Fascinating. That's excellent. So are there some questions about this? Because this is a very interesting innovation.
We also created DAOs that were a non-LLC wrapper.
Wow, okay,
We're the
so
only
we're
state-
hitting number 3 here.
Yeah,
Okay.
I was saying we're the only state that has a DAO law that is a non-LLC wrapper. And now that one doesn't go into effect until January of next year, because you talked about challenges. There are some challenges. We're currently working with the Tax Commission and the Division of Commerce in the state of Utah to say, how are we going to implement this? But it's a whole new corporate structure.
Yes, go ahead, Eugene. Wait for a mic.
This is very near and dear to my heart.
Yeah.
Do you have to register individually DAO members and have them pass KYC?
So what we're looking at now, and this is part of what we're working out between now and this is why there's a January 2024 implementation, is because right now we're trying to balance the anonymity of a DAO, but also the needed transparency. So what we're looking at is having the DAO register agents. So there would be registered agents for the DAO that fulfill some of the taxation requirements, but unless there would be pending litigation, there would be no need to actually expose the identity of the DAO members.
That's what I do right now. I just sign. That's all I do is sign and file.
Yeah, and so we're trying to balance this. We're trying to balance the anonymity with also ensuring that there's accountability.
Yes, please. Oh, wait, right here. I didn't see. Go ahead.
Just a simple question. With the, I'm not really a custodial wallet. What if they become a custodial wallet? Like, is there any kind of diligence about whether the companies that are non-custodial have changed that, or
To become custodial? That's a fantastic question. So this is why we call it the non-custodial registry. Each number, every year they would have to recertify, and when they recertify, we ask them questions and they have to certify that they're still a non-custodial wallet. If the company were to develop new products or new offerings that would become custodial, at that point they would qualify for a Money Changer Act, and so they would go get that. But they do have to recertify every year that they are a non-custodial wallet.
Yes, go ahead.
I am so excited about digital signatures and a lot of the stuff that's been happening. I want to ask you, so for these DAOs that are not LLCs, and what is the limited liability aspect? Are they severally liable? Are they jointly liable if there's something happens? I'm just curious about that aspect.
So these are some of the issues that we're trying to work out now, obviously in the structure between now and January of 2024. But the idea now is that the organization would be liable, and so then we would look to see who the controlling stakeholders are. But these are exactly the questions that we're looking at, which if you have great ideas, we're in the process, throw ideas my way.
Go ahead.
Oh, I'm the managing member of the Billionaire Zombies Club LLC DAO. So I'm very familiar with the DAOs and the don'ts. But the one piece of the DAO, it's the own your acts and own your words, and the one person who did the deed that got the DAO in trouble should be the person who's liable. And right now, that they just get off scot-free. So if you make that where that person, they have to own their words and actions, and that person can be individually identified, and that person is liable, not the entirety of the DAO, everybody will move to Utah.
That's the goal.
I don't know if
Bring
there's
your
that much room in
companies and-
Utah.
Bring your companies and your commerce. Hey, I've got enough room in my county that we could add another 10 million people. We have 150,000 undeveloped acres.
I've been there. You don't have that much room.
We do west of the lake.
I know. I
We
actually
got
have
it.
2 nephews who live west of the
Yeah.
lake. All right. So with that, thank you, Amelia. Kyle, tell us what's going on with credit unions.
Yeah, for those of you who came in late, Kyle Hauptman, I'm a vice chairman of a government agency, National Credit Union Administration, NCUA. We're like FDIC, but for America's 4,800 credit unions, right? We insure the accounts. We have a fund of $21 billion, and we're also the regulator for about 2/3 of them. The rest are state charters. I want to say, though, props to Utah. The way it is in this country, states are showing the way. Not, I say this as a federal employee, okay? States are showing the way. I'm proud to say that we've taken a different tack at NCUA. So we're a 3-member commission appointed by the President of the United States, confirmed by the Senate. My term ends summer 2025. I've made this general topic my absolute #1 priority, all right? So my career is going to live and die with how this all goes at credit unions.
Best of luck.
Yes.
We're rooting for you.
I hear you. What I always say is the biggest threat to credit unions, and they're very TradFi, right? The biggest threat is that they're going to eventually become Blockbuster Video, that they're going to slowly die, banks and credit unions. TradFi will lose out to DeFi. So that's what I consider to be my goal, my true north, is to allow experimentation and innovating that allows credit unions to have a fair shot at being part of the future, to do the car loans and mortgages, et cetera, of the future. We've put out 2 pieces of guidance that were positive, which is 2 more than any other agency. Including, we put out in May last year, I'm very proud of it. It looks very simple. It's just broad, 1 page. Blockchain is here. It is neat, it is cool, and you can do things. We purposely, there's a new technology, okay? And I'll tell you this, and I'm going to say this as a Republican, okay? I modeled this, and I had to get buy-in from my other 2 board members. I modeled after the single, in my opinion, the best piece of economic policy making out of DC that's happened since I've been alive, which in my view is 1997 Clinton-Gore Principles for the Internet. They put on whitehouse.gov in 1997. Whitehouse.gov itself had only existed for 2.5 years at that point. It was early, which is the best kind of clarity. And it wasn't a law, it was just on the White House website. Number 1, the private sector shall lead. There were 5 of them, okay? We know what happened next, right? America won the internet. We got all the disruption everybody else did. We lost all of our video rental jobs, so did everybody else. But we got all the upside. We had the most investment, the highest investment returns, the most jobs, the most headquarters, and people wanted to come to this country to work in that industry, okay? I think it's a little jarring if you're an American to see people have the other view right now. Wow, it'd be easier to run my company, to get a job, to find investments if I was outside the United States. We, as those of us who are Americans, we want to be the place everybody wants to go to, right? Nobody in Miami gets on a raft to get to Cuba. Right? And
And I
it's,
want everyone in Miami to come to Utah.
so we put out broad guidance and things are happening, okay?
So that was the first one. What was the second one?
The one I just mentioned, the broad one was the second one. The first one was just about third-party vendors, do's and don'ts. What essentially was used to do just something real basic, connect to crypto exchanges so you can buy and sell Bitcoin without leaving your credit union app. And for the credit union, it's just a fee business. They get a piece of the commission. That's it. Obviously, there's no balance sheet implication. It's the same way you can connect your bank account to your brokerage. Makes it easier to send the money back and forth, et cetera, okay? So people went and did that, and this is the power of guidance. There was a big vendor, crypto exchange, that went to 30 credit unions. 29 of them said no or not now, all using the words regulator or NCUA. One of them did it. We put out guidance. Now, at an agency, we only do 2 things, rules and guidance. Rules have the force of law. We have to vote on them at our monthly meeting. Guidance, we can put out whatever, okay? We put out guidance on this. Why? Because it didn't break any rules already. We didn't have to do a rule. Anyway, we put out some guidance on this, and the other 29 of the 30 credit unions called the vendor back and said, let's do it. Because we know sometimes when people blame government, sometimes it's a way to get the salesperson off the phone. I'd love to buy your product, but you're not a government, right? That happens. So anyway, we've seen innovation. We've seen people trying, and in a number of things. ID is one of them, and it would help if the federal government would make their IDs do what you guys did. That would help. But we've got anti-fraud things, experiments with blockchain-based ID. Less fraud, massive reduction in time wasted on it, because one $500 fraud can waste a credit union employee's time for days, right? Custody of digital assets, right? Again, what I tell them is, I tell our people, credit unions already have custody of billions because they're on cold wallets sitting in safe deposit boxes. If you ever read the book Bitcoin Billionaires, the Winklevosses went all over the country and put their keys in all these different, all over the country. You already have it, right? So anyway, that's again a fee-based business, right? Bitcoin can go to zero, it doesn't affect the value. It's a fee-based business just like a safe deposit box. We've seen, again, crypto exchanges, loans versus it, and there's a lot of political pressure right now to reduce overdraft fees and late fees. You've seen the CFPB, et cetera. Well, what does that mean? Whether you agree with the regulators or not, you need other sources of income. And if somebody has $1,000 of Bitcoin, wouldn't it be easier, you know, let's say today's Wednesday, you don't get paid till Friday, but rent's coming out today. Your choices are all bad, right? Get dinged by 10% for your landlord, whatever, you know, your mortgage credit report. To borrow at, say, 30 cents on the dollar with one click, $300 of your 1,000 of Bitcoin, a margin loan. You can't default on it. There's no debt spiral. I have a margin loan in my brokerage account. I can't default on it. Anyway, so these are neat things that are happening. You wanted examples. Obviously, the basic settlements, stable coins, and I'll tell you this, there's a couple groups that are pretty neat. The one I can mention, Maven, they're public about it. They have a website. Trying to start a blockchain-based credit union with the field of membership. Credit unions have to have some commonality. Members of the military, members of a church, et cetera. That are members of different associations. And the credit union itself, like when the members vote on the board and this and that, will be a DAO. Credit union itself will be a DAO. So I really hope that happens. Those would be new charters. And I'll tell you this, you know, as a regulator, again, in this country, it's a little difficult. And I had a lunch with a reporter that you probably know of, and who said, aren't you worried there's going to be problems, you know, if you let them do all this stuff? I said, I know there's going to be problems. There always is, with any new technology. Did you guys know we had 0 plane crashes before we had planes? Oh, not one, thousands of years, not one. All right. Anyway, so I would say this to any of you who are vendors or, you know, want to partner with financial institutions, speaking to a CEO and a board who have limited time and resources, if you want them to go your way, cut to the chase. Don't geek out on the tech. Start with the conclusion. Would you like to save money with the fraud? Is way fewer fraud if you use blockchain-based ID. That's useful. The tech can come later. And I know people in the industry love getting into the tech side of it, and God bless, we need people who can. But I would say if you had to go back to yourself from 20 years ago and explain what a smartphone was, even if you understood how it worked, which I don't, even if you did, you wouldn't talk about the satellites and 5G and the gigahertz and the spectrum. You'd say, dude, it's so cool. When I need a cap, I hit a button and the guy comes and picks me up, right? You'd say, I can be in foreign countries and I have a live map. You know, it's awesome. You'd cut to the chase. What's useful about it? How you explain it to your grandmother. I've seen too many deals not happen, too much innovation not happen, because people start with the tech and, right? Thank you.
I want to second that. Absolutely. That's one of the biggest things that I found. For example, when we were trying to get the bill passed that said government in Utah can accept crypto as payment for taxes and utilities and things, I had a member of our legislature say, but I don't understand the technology. And I said, I don't understand how my cell phone works, but like I text, like I put in my son's name and then I like write words and then he replies.
Yeah. If I had a Hauptman account in 1996, I hit a button, it goes to somebody else thousands of miles away. Have no idea how it works. Also true of every single legislator in the state. It's true of everyone.
Yeah, and the same with the exchanges, right? I told him, I said, I worked at Caterpillar, I was paid in US dollars, I lived in Canada. Having to exchange money constantly was a pain in the ass. So what did I do? I paid for everything on my Amex card. And then at the end of the month, I just paid the Amex card out of my US bank account. They did all the crap behind the scenes. That's what this does.
If it's a politician, not a regulator, say your campaign accepts online donations and text donations, you don't know how that works, do you? And I bet you don't have a problem with that. Right.
Correct.
Yeah.
In fact, if you would like to donate, go to amelia.vote, click donate.
Excellent. So thank you for sharing, all three of you sharing some of the innovations that you're bringing to each sector, government, finance actually, and vital records, and oversight. So it's excellent. Does anyone have any questions? We have about a minute left. So yes, all the way in the back. Oh, you got to wait, Eugene.
Eugene already asked one.
You're too excited. We have two. Okay, this woman here, and then the woman in the far back. Is that you, Gabrielle?
That is.
Okay, great.
So I had a question about the credit unions. I'm a CPA. I'm part of a group of about, over 100 CFOs, CAOs, and they all, it's in this Slack group, and we all talk about different accounting issues in crypto and managing Web3 companies. When Silvergate collapsed, January and February, there was tons of panic going on in that group of we got to move our money, where are we going to put it? Then the Federal Reserve came out and said, member banks, we don't want you to hold crypto. We don't really want you to transact in this stuff. Lots of panic. Many of those companies, my impression is they've gone offshore or they've gone overseas. So what I'm hearing from you, it sounds like, is maybe these American startups can actually, that are in Web3, in crypto, maybe they can start to bring their money back and explore credit unions as an option. Is that fair?
Yeah, I certainly hope so. I will say when it comes to banking, and maybe I was naive, but I did not foresee the issues with the industry involving getting bank accounts to run payroll, like the way the cannabis industry had for a long time, right? I thought they have a lot of other problems. What my agency, again, we are the insurer for 4,800 credit unions. I mean, we have to write a check like the FDIC does if they collapse, okay? What our agency, which regulates and insures credit unions, what we cannot handle are issues for other agencies, such as what is a security. That's other agencies. I wish I had a say in that too, but yeah, so I would like to see, one of the reasons there's been interest in chartering a crypto-based, a blockchain-based credit union is to bank those people the same way the cannabis industry would like to start Cannabis Bank, because they, at least, there's one institution that's going to bank cannabis, It's the same sort of thing, but I did not foresee that being a problem. And again, it pains me, take off my NCUA hat, put my American hat on, it pains me to see people say, I wish I was someplace else besides America.
Gabriella, wait. We don't have enough time for...
Well, the issue is the innovation, right? Google didn't leave other countries. It was started here and grew here, right? And I think there's a lot of, it will go offshore or will they come back? That speaks as if there's a fixed amount. Okay, but the way economic growth is, we didn't, Facebook and Google and Microsoft and Amazon, they didn't move here. They grew here. And I would say if I have a garden and I allow sunlight and water, and next to it is your garden that you step all over trying to help, right? When I have nice big tall plants, is that because yours moved over here? No, mine grew here because it's a better environment,
Unfortunately, we've ran out of time. So with that, thank you, panelists, very much.
Thank you.